All right, this is exercise 10-26, which is budgeted cash receipts and budgeted cash disbursements. Now, this is just a little bit trickier um, than the production budget and the materials purchase budget because you have two components with particularly with cash receipts quite often, and that is you sell some things on credit and you sell some things for cash. So the cash is always going to come in the month of sale. Cash sales are going to come in the month of sales, but the credit sales will come in over time, and you have to read very carefully what they tell you that time period is when you're looking at this. So let's take a look at 10-26 on page 389 of your book. It says Timco, a retailer, makes both cash and credit sales. Information regarding budgeted sales for the last quarter is as follows. So October, November, and December is 100,000 for October. November is 120, and December is 80,000. Then the credit sales is 100,000 in October, 150 in November, and 90 in December. Past experience shows that 5% of credit sales are uncollectible. Of the credit sales that are collectible, 60% are collected in the month of sale. The remaining 40% are collected in the month following the month of sale. Customers are granted a 1.5 discount for payment within 10 days of billing. Approximately 75% of collectible credit sales take advantage of the cash offer. All right. So, what we're going to have to do here now is the way I address this problem is that I create a grid. So across the top will be October, November, and December. And then I also put down, and I'm going to put cash here. And then I'm also going to put down October, November, and December credit sales. All right, so the cash we collect 100% of it. We don't have to worry anything about that. And so for October, we're going to get 100,000 in cash. In November, we'll get 120 in cash. And in December, we will get 80 in cash. Boy, and we think my board writing is bad, right? All right, so 80,000 in cash for December. All right, so now we have to play with the credit numbers, and so we're going to say that 75% of these take advantage of the cash discount. So if we have 100,000 in sales and 75% take advantage, 75% 100,000 credit sales, and 75% take advantage of the collectible, take advantage of the discount. So the first thing we have to do for the credit sales is take out the uncollectible. Now this kind of warps our sensibilities from doing financial accounting, because with financial accounting we report the sales and then we record the allowance for uncollectible accounts as separate things. But here we're looking at the cash collections, and so we're not going to write off anything, we're just not going to collect it. And so 5% are uncollectible. So for October, that's going to take us down to 95,000. In November, we have 150,000 times 95%. So that means 142,000 will be collectible. 142,500 in November, and then 90,000. So that'll be 85,500 is collectible out of the December sales. All right. So the next trick to this is it says 75% of these take advantage of the 1.5% discount. So if we take 1.5% and we multiply that times 75%, that gives us 1.125 is the average discount on this. So, so if we take 1 and subtract 0.01125, that means we're actually going to collect 98.875%. So we're going to multiply this times 0.98875, and we'll do that for each of these. So that will be 93,931.25 will be collected out of October's credit sales. Now, we haven't decided which month yet, but that's what will be collected out of October's credit sales. We will collect 140,896.88. That's rounded. It's 875 on my calculator. So 88 rounded will be collected of November's sales, and then 85,500. We will collect 84,538.13. Again, that's rounded. From the December sales. All right, so now we have to divide each of those into the months, and it says 60% is collected in the month of sale and 40% is collected in the month following sales. So in October, the total collectible credit sales will be 93,931.25. And we're going to get 60% of that. And so that will be 60% will be $56,358.75 will be collected of October's credit sales will be collected in October. Now, obviously, we won't collect any of November, December sales in October. So we are done with the month of October. Based on the data that we have. And so we can add that up and we'll collect $156,358.75. And I'd be fine if you rounded things to the nearest dollar at some point, either down here or up here. That's fine. Obviously, as we know from doing our homework, the homework manager can be picky where you round things. So be careful about that. But so that's our collection. That's our cash collections in October. So now we also have that 93,931.25 that we're going to collect 40% in November. And so that will be 37,572.50 of October's credit sales will be collected in November. right? And now we're done because we collected in 2 months. Some problems that you have may go for multiple months. I think textbook problems usually go about 3 months, something like that. And so we take that over. Now November sales, we've got 140,896.88. And that will be, we collect 60% of that. And so that will be 84,538 and 13 cents. And then we're going to collect 40% of that in December. And so that will be 56,358 and 75. And this time we got to round down. So that will take care of all of November's sales, and we're done. And so now we can add this one up. And so we have the 120 cash sales plus the 37,572.50 from October, and the 84,538.13 from November credit sales. And so that gives us cash collections for November of 242, 110 and 63 cents. Finally, we have to take care of December's sales, and that will be 84, 538.13, and we're going to collect 60% of that. And so that will be 50,722.88. Now don't forget the 80,000 up above. And so we can now add that all together. 6358.75 plus. And we end up with 187,081.62 for our collections in December. Now, one of the things I like to do is figure out what our accounts receivable is going to be at the end of the period. And some of the more advanced problems might ask you that. So I'm going to take that 84,538 and 13 cents and multiply that times 40%. And so our accounts receivable from the December credit sales will be 33,815 and 25 cents. And so that will be our cash collections for the month. Okay. The problem then goes on. It says inventory purchases for the month are 100% of the cost of the following month's projected sales. The gross profit rate for Timco is approximately 30%. All merchandise purchases are made on credit, with 25% paid in the month of purchase and the remainder paid in the following month. No cash discounts for early payment are available. All right, so I'm going to flip the page here and do our cash disbursements budget. Okay, so our inventory purchases are 100% of the cost of the following month's projected sales. Okay, so our projected sales for October, November, and December are just those totals that were on there. And so that was 200,000 for October, 270,000 for November, and 170,000 for December. Okay, but the gross profit rate for Timco is approximately 30%. So that means that our expense is going to be 70%. So we're going to multiply each of these times 70 or 0.7. Okay, so so 200,000 times 0.70 is 140. For November, 270,000 times 70% is 189,000, and 170,000 is 119,000. And so we need the cash disbursements for November and December. All right. So again, we're going to set up a grid, November and December. And we're going to make the purchases from October, November, and December. Now, October's purchases are November's sales. Remember that, right? So we really didn't need to do, we do need to do, no, we don't need to do the October since we pay it in 2 months. So we can eliminate that one. So we've got November is 189,000 on that one. Well, the purchases occurred in October. So 189,000. And it says that all merchandise purchases are made on credit, with 25% made in the month of purchase and the remainder made in the following month. So October's purchases were made in September, so that'll be September and October. November's purchases will be made in November's purchases will be made in October, so 25% of this 189 will be paid in October, but 75% is paid in November. So 189 times 75%. So we're going to have 141,750 payable in November, and we're done because we purchased November's sales in October and we pay for it in November. So we're done with that one. And then we've got the 119. And we're going to pay 25%. So December sales will be purchased in November, and 25% of 119 is 29,750. And we can add that up. And so our cash disbursements for the month of November will be 171,500. Now December, we're going to take that 119 and we're going to pay 75% of that. And that will be 89,250. And it says the budgeted total sales for January of the coming year equals 200,000. So that'll be the same as November, the 140. And so we're also going to have 25% of 140, and that will be 35,000. And so add those two together, and we get 124. 250. So our cash disbursements in November is 171,500. Our cash disbursements in December is 124,500. Like I said, these cash disbursements and cash payments, or cash disbursements and cash receipts, are a little bit trickier than some of the other budgets. So you'll want to practice these quite a bit. I guarantee you will see one of these on your exam. So okay, so we'll see you on the next exercise.